Imagine waking up one morning to the soft hum of your phone, a small vibration followed by a single notification. Deposit received. You didn't make a sale today. You didn't attend a meeting. You didn't even step out of bed yet, but your balance just increased. That, in its simplest form, is passive income. In a world where inflation eats away at savings and job security feels less certain than ever, the idea of earning money while you sleep sounds like a fantasy. But in 2025, it's not a fantasy anymore. It's a strategy. Thanks to automation, digital platforms, and investment access like never before, ordinary people, not just corporations or wealthy investors, can build income systems that work quietly in the background. The problem is, most people misunderstand what passive income really means. It's not about doing nothing. It's about doing the right things once and letting them repeat forever. It's about turning your skills, money, and creativity into assets that pay you over time. So, in this video, we're not talking about gimmicks, get-rich-quick ideas, or unrealistic promises. We're exploring 5 proven, sustainable passive income ideas that still work and will continue working in 2025 and beyond. They require thought, setup, and patience, but if done right, they can change your financial trajectory forever. Before we dive into the list, let's redefine something fundamental. What passive income really is. Passive income is money earned with minimal ongoing effort, but the phrase minimal effort doesn't mean no effort. In the beginning, you'll need to build, plan, research, and probably fail a few times. But once the system is running, it becomes something that earns even when you're not actively involved. It's like planting a tree. You water it every day. At first, you protect it from the wind, and you give it sunlight. But once it matures, it gives you fruit for years. This video isn't about luck. It's about leverage. Leverage of time, leverage of technology, and leverage of capital. We'll talk about dividends that pay while you sleep, digital assets that scale infinitely, and creative systems that turn one-time effort into recurring value. If you've ever thought that financial freedom was out of reach, I want you to watch this video, not as entertainment, but as a manual, because the difference between those who earn actively and those who earn passively is not intelligence, it's structured. And with that said, let's begin. 1. Dividend investing. Let stocks pay you. When you hear the phrase, invest in stocks, most people imagine buying shares and hoping the price goes up, but seasoned investors know the real secret. You can get paid even when the stock doesn't move. Dividend investing is the practice of buying shares in companies that regularly share a portion of their profits with shareholders, that's you. Every quarter, these companies pay you cash, simply for holding their stock. It's a system that has quietly made people wealthy for decades, not through speculation, but through consistency. Take companies like Cook, Procter & Gamble, or Johnson & Johnson. These are dividend aristocrats, meaning they've increased their dividend payouts every single year for over 25 years. Through recessions, market crashes, and pandemics, they kept paying. Here's the beauty. If you invest $10,000 into a company with a 4% dividend yield, that's $400 a year in cash flow. Without selling a single share, reinvest that $400 into buying more shares, and the next year, you earn dividends on that too. That's compounding, the 8th wonder of the world, as Einstein called it, over time. Dividend investing becomes less about getting rich fast and more about building a foundation of predictable, growing income. And thanks to apps like Robinhood, Fidelity, and Wealth, you no longer need a financial advisor or a $50,000 minimum to start. You can begin with as little as $10. Automate your contributions and slowly build what's called a dividend snowball. The snowball effect starts small, maybe $1, then $5, then $50 per month. But as your portfolio compounds, your snowball grows heavier and faster. It's not flashy, but it's one of the most mathematically certain ways to earn passive income. And the best part, you don't need to time the market. You just need to spend time in the market. 2. Digital products. Build once, sell forever. If dividend investing is the slow and steady engine of wealth, digital products are the creative rocket fuel. In the digital age, your ideas can be turned into assets. Whether it's a course, an ebook, a template, or even a music sample pack, once created, it can be sold thousands of times without additional cost. Think about this. You write a 40-page beginner's guide to personal budgeting and upload it to Gumroad or Etsy. You price it at $9. If 100 people buy it, that's $900. But that's not once. That same file can sell again and again, forever. Unlike a physical product, you don't have to restock, ship, or maintain inventory. The cost of replication is zero. Platforms like Gumroad, Payhip, and Etsy handle the transactions. You just need to bring the audience. And that's where creativity meets marketing. You can drive traffic from Pinterest, YouTube, or TikTok by offering free snippets of your paid product. For example, show how your budget tracker works, but keep the full version behind a $10 paywall. The best digital products solve simple but universal problems. A. How can I save money each month? B. How can I organize my life better? See? How can I learn something new efficiently? It's about creating tools, not trends. And because digital products scale infinitely, your earning potential is One good digital product can fund your rent, your bills, even your next big project. Here's what separates successful creators from everyone else: consistency and customer feedback. Update your product, refine it, and keep adding value. The internet rewards persistence far more than perfection. When you build once and keep improving, you stop trading time for money and start trading value for scale. 3. YouTube automation. The faceless Goldman. You've probably heard people say, it's too late to start a YouTube channel. But the truth is, YouTube is far from saturated. It's just evolved. In 2025, you no longer need to be on camera to build a profitable channel. Welcome to the world of YouTube automation. Here's how it works. You pick a niche, say personal finance, technology, or history. You research what people are searching for. Write educational scripts, add AI, gather stock footage or motion graphics, and upload consistently. Once a video gets monetized, it becomes a digital asset, one that earns you ad revenue. 24/7. Some automation channels are making thousands per month without ever showing a face. They rely on quality scripting, search optimization, and watch time. The key metric here isn't subscribers, it's retention. If you can hold someone's attention for even 60% of a video, the algorithm will reward you with more reach and more ad placements. Now combine that with a high RPM niche like finance, technology, or investing, and your earnings multiply fast. For example, a finance channel with a $25 RPM could make $2,500 per 100,000 views, and it scales beautifully. You can hire scriptwriters, editors, and voiceover artists, creating a production pipeline that runs while you sleep. The best creators treat YouTube not as a hobby, but as a business. They test thumbnails, track data, and optimize based on what viewers respond to. And unlike traditional businesses, the startup cost is almost zero. Your knowledge and creativity are your capital. 4. Real estate crowdfunding. Property without ownership hassles. Let's be honest. Real estate has always been one of the most powerful wealth-building tools, but for decades, it was out of reach for most people. You needed tens of thousands for a down payment, good credit, and time to manage tenants. Today, that's changed. With real estate crowdfunding, you can invest in property projects with as little as $100. Platforms like Fundrise and CrowdStreet let you pool your money with other investors to buy shares of real properties, apartments, offices, warehouses, and earn returns from rent and appreciation. You don't fix leaky faucets. You don't chase rent. You simply collect your share of profits. It's fractional ownership, and it's revolutionizing how people access real estate wealth. A $1,000 investment might return 8 to 10% annually. And because these funds often reinvest profits, your returns compound over time. You also get diversification. Your small stake might be spread across 50 or more properties nationwide. That means lower risk and more stability. The best part, the platform handles the paperwork, management, and tenants. You're essentially a silent investor in physical assets. For people who want real estate exposure without the headaches, crowdfunding is the bridge between Wall Street and Main Street. And as the industry grows, so does investor protection with audited projects, transparent reports, and SEC-regulated structures. This is not just a passive income idea, it's the democratization of wealth. 5. High-yield savings and REITs. Safe and steady. Not all passive income needs to be risky. Sometimes, the best strategy is simply letting your money rest in the right place. Enter high-yield savings accounts and REITs. Real estate investment trusts. A high-yield savings account offers interest rates 510 times higher than traditional banks. You're not going to double your money overnight, but you'll keep your capital safe, liquid, and working for you. For instance, a $20,000 deposit in a 5% APY account earns $1,000 per year, risk-free and fully insured. Combine that with cashback or referral bonuses, and it's a solid safety net that also grows quietly in the background. Then, there are REITs, publicly traded funds that own income-producing real estate. Think of it as buying a slice of commercial properties, offices, hospitals, shopping centers. REITs typically pay dividends quarterly and are a favorite among retirees and investors looking for stability. They're easy to buy and sell, and they often yield between 4 to 8%. Together, high-yield savings and REITs offer a peace-of-mind, passive income strategy. No stress, no sleepless nights, just quiet, steady growth. They may not make you rich fast, but they protect your wealth while it multiplies slowly. So, let's recap the 5 systems we just explored. A. Dividend investing. Steady, compounding cash flow. B. Digital products. Build once, sell forever. C. YouTube automation. Scalable, algorithm-driven revenue. D. Real estate crowdfunding. Property income without ownership. E. High-yield savings and REITs. Safety meets consistency. Each of these represents a different form of leverage: financial, creative, or technological. And when you stack them together, they create something far more powerful than money: freedom. Passive income doesn't mean easy money, it means smart money. It's not about escaping work. It's about designing work that escapes you. If this video helped you understand how to build real, modern passive income streams, then give it a like, not for the algorithm, but as a commitment to your own financial growth. Drop a comment below. Which of these ideas would you start first? Dividend investing for safety, or digital products for creativity? And if you want a full step-by-step breakdown for each idea, from creating your first product to automating your YouTube channel, subscribe now and turn on notifications. Because financial freedom doesn't start with money. It starts with information. And you've just taken the first step.